FTX has been considered one of the safest and most reliable exchanges of a freewheeling cryptocurrency industry, which wants to bring tokens into the financial mainstream. But Sam Bankman-Fried's empire collapsed almost overnight, highlighting the extreme volatility of the virtual currencies. The downfall has sent shockwaves across the market and raised questions over its viability. He's apologized, but that hasn't helped more than 1 million creditors who are potentially now out of pocket. Well, the company was valued at $32 billion in January, but by mid-November, it was filing for bankruptcy protection after failing to secure a rescue from rival exchanges. FTX is now under criminal investigation in the Bahamas. U.S. federal prosecutors are also looking into the case. The crisis has brought back memories of the collapse of Lehman Brothers. That's when the downfall of the investment bank sparked the 2008 financial crisis. The ripple effects of FTX's collapse have been felt throughout a struggling cryptocurrency market. Billions of dollars have been withdrawn from exchanges, and the prices of several digital coins have dipped. Bitcoin fell to around $16,500. It had reached a peak of more than $68,000 in 2021. The entire market's capitalization now stands at $900 billion. That's down from $3 trillion just 1 year ago. And that follows a series of setbacks for the cryptocurrency industry. Earlier in May, the stablecoin Terra USD crashed and broke its one-to-one peg with a dollar. Almost a month later, the lending platform Celsius paused withdrawals, blaming extreme market conditions. Then came the bankruptcies, including one by Three Arrows Capital, one of the most prominent crypto hedge funds in the world. Joining us from Berlin is Jonas Gross. He's chairman of the Digital Euro Association, that's the DEA, and head of digital assets and currencies at Itonek. Sir, good to have you with us. The collapse of FTX seems to have sent shockwaves through the industry. Why was FTX so important?
So if people today want to buy cryptocurrencies, they do so via crypto exchanges. And FTX was one of the largest. So with, millions of users with billion-dollar trading volume every day, right? So they were one of the key players. And what basically happened in the end is that FTX was taking on very risky positions. So they basically took the money of the clients and also the crypto assets to operate into leveraged business, which in the end turned out to fail, right? It turned out to provide substantial losses. And just, two weeks ago, the industry feared that something might going on with FTX. And this led to the situation that more and more players withdrew their money, right? Which basically brought them into the situation that liquidity wasn't there, and which ultimately led to bankruptcy filings of FTX just 1 week ago.
And what about the people who didn't take their money out? What happens to their cash?
Basically, this remains to be seen, right? So it's in the bankruptcy process now. So we don't know how much of the money people will back, or also of their crypto assets. So this remains to be seen, but this will definitely be, a step back for the crypto exchange space, and will, also lead to a wave of probably more regulation in this space, because this was also one of the key issues, that FTX was not regulated in the sense.
Yeah, I wanted to ask you about that, because one would think that this is going to give significant leverage to those who want to see more transparency and, perhaps more importantly, want to see more regulation.
This is on the short term, of course, the development about FTX is horrible, right? So lots of people lost money, lots of investors lost money. But I think on the long run, this can also be like a chance for crypto, because it doesn't change anything of the fundamentals about crypto, right? So that FTX failed was a governance issue of FTX, right? So horrible risk management, very speculative positions, and also the regulatory gap you mentioned. So we do need regulation. We also do need more kind of a global regulation, because it's not sufficient if one country is regulating, because then entities can just move to other countries. And this is, I think, what we do need right now, and also what we will see over the next years to come as a learning of the FTX case.
I don't understand particularly very much about cryptocurrency. It's a very complex situation, and to people like me, it would seem that this is based essentially on trust. It is on a trust that this system is actually going to work. And when you get situations like this, obviously that trust gets undermined. How far do you think the ripple effects of this are going to go? How are other exchanges going to be affected by this?
So in the short term, I think there could be that other exchanges are affected. We don't know yet, right? So the situation is so complicated. We don't know what ripple effects will come out here. But I think what's really important to understand is this is really not, Bitcoin, Ethereum, the crypto assets are not to blame here, right? It's FTX to blame. It's a company to blame. So the kind of analogy I would like to give is when Wirecard became bankrupt, we didn't say stocks are a bad thing, right? We said basically, one company made a horrible mistake, right? We also need to act, which we do see and will see after regulation. But I think this is really important that it doesn't change any of the fundamentals of crypto, but of course shows that we need more regulation, and we also do need, of course, proper risk measures, governance methods inside these very, important and large crypto exchange companies as well.
There have been a series of setbacks in the market, particularly over the last year. I mean, the market capitalization, I'm just reading, is down from 3 trillion just 1 year ago to $900 billion. Why has it been such a challenging year overall for cryptocurrencies?
Yeah, so we do see that we are now in a bear market for 1 year, as you mentioned. And we thought, the market was kind of stabilizing, and now FTX hit and basically the markets are going down, which I think is a logical development. What we shouldn't forget is that this development is not specific to crypto, right? It's specific to all kind of risky asset classes. So we have seen similar declines in terms of tech stocks, for example, that within the past year also declined in a similar size as crypto. So I think the main reason why this happens, of course, are general macroeconomic reasons. We do see the interest increases in the US that sent basically down the prices of, as I said, most of the risky assets. But of course, and we do see also crypto-specific developments. We have seen Terra Luna crash half a year ago. We now do see FTX. But generally, I would say that it's the macroeconomic situations about interest rate hikes, high inflation, also recessionary developments we are seeing that are driving down the prices of not just crypto but general of risky assets.
The big money, of course, is to be made in those risky those risky efforts that you were talking about earlier, those risky investments, which brought down, in this case, FTX. But others, one would imagine, will be taking similar risks. There is going to be a lot of pushback if there is an urgency, a sense of urgency to bring in regulation and so on, isn't there?
Yeah, I think it kind of is, right? And this is also why, we've seen FTX was located in the Bahamas. They also had a US entity, but there was no regulatory standard. And what I would basically call for in this regard is like more regulation as we currently see in the EU. In the European Union, there is the market and crypto assets regulation currently negotiated, which is also about, exactly regulating these things. And I think this is what we need, not just in the EU, in more countries, and also on a level that is basically, kind of globally coordinated, even if this, of course, from a political level is definitely, quite a challenge to achieve.
In terms of investments, do you think that investors are going to be a lot more cautious when it comes to the companies in which they invest? As you say, it's not necessarily the cryptocurrency itself that is the problem, it is the management that is the problem.
Exactly. So it was the management, it was the governance, it was horrible risk management. We've even seen that after the bankruptcy filing, some money kind of, disappeared, which of course cannot be the case for such large companies in this regard, right? And I hope that investors do not completely, basically do not enter this space again, because as I said, there are fundamental use cases about crypto that are really interesting, that basically, crypto can basically lead to the fact that they include people to the financial sector, financial inclusion, and, it doesn't change any on the fundamentals. And this is, I think, something one should consider, and why also investors shouldn't step away, because these bear markets are the markets where, basically stuff is being built. And I think this is also why people shouldn't shy away from crypto now. But of course, on a regulatory side, there is definitely the need to act.
Really good to get your thoughts on this. And Jonas Gross, thank you so much for being with us on Counting the Cost.
Thank you very much for having me.